The index, the leading economic indicator for the month of July was down again. It's the fourth decline that we've recorded in the last 5 months. So this recovery, and it has been a recovery, is now slowing, and we're moving into the area where I think the likelihood of a double-dip recession, in other words, moving back into recessionary territory, is rising. Now, I don't expect a double-dip recession, but the likelihood of that is increasing each month unless we get some changes here. Now, what change do we need? We need the housing market to get better. I mean, we hear all this about this and that. It's the housing. I mean, housing is just, it's pulling down growth. It's depressing confidence. It's just the real negative in our economy.
So you're saying housing is behind the drop. What else are we looking at? I mean, confidence probably has gone way down.
Cindy, our confidence index for the month of July was down to its lowest level since February of 2009. Now that's before the recession ended. So this was the lowest reading, below growth neutral for the month of July. When we asked the supply managers to look out 6 months and tell us what they see things not looking very good. And of course, this is consistent with what we're seeing from the national economy. The national economy is just not growing like most economists thought it would be growing at this point in time. So the numbers, the July numbers, now they're still in the growth range, but it's just growth that is just not what you'd expect coming out of this deep recession, and it's not enough to get us back into really where the unemployment rate begins to come down. The unemployment rate now is 9.2%. Of course, in this part of the country, the part of the country we survey, which is the 9 states from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, these states have done much better, but even there, in our survey region, it's just not looking that good. And there is the likelihood of moving back into a recession if we don't see some changes in the right direction soon.
We've had some pretty bad natural disasters in this area. That hasn't helped, has it?
Absolutely not, Cindy. The supply disruptions are really slowing some growth in some of the businesses, many of the businesses that we survey. Of course, in Missouri, we've had the tornadoes that hit Joplin, and of course the area surrounding Joplin. You've got floods in North Dakota. You've got floods all the way from South Dakota moving down to Nebraska, Iowa, and even Kansas and Missouri. That's just hurting the companies that we survey, and it's hurting them getting deliveries. For example, I-29, those who don't live in this part of the country, I-29 is a big artery, Interstate 29, that transportation supplies move on. I-29 is closed, at least in a couple of parts, because of flooding. That's having some impact. So all this is coming together and really pushing our growth number down. Now, I am saying the growth number is coming down. I'm not saying it's in negative territory, but it's not enough growth to bring the unemployment rate down, and that's the real concern. Even though our unemployment rates for most of the states that we survey, about half what the national numbers are. That's North Dakota, South Dakota, Nebraska, and Kansas. Now, other states have a little bit higher, but even those states, there's not a state that we survey that has an unemployment rate equal or above the national rate. So this part of the country is doing somewhat better.
One thing we have talked about a lot are the wholesale prices. How's that look?
Looking better. Of course, the economy is slowing, so the price pressures are slowing, and the index comes down, but it's still indicating inflation at a bit higher rates than we'd like to see. And of course, that's not good when you've got a slowing economy and too much inflation. Now, we asked the supply managers to look out and tell us what they think they're going to get in terms of wage gains over the next year. 1.7%. That's the average over the next year. Now, how does that compare? From earlier months, we asked last November the same question. It's down about 0.5%. So all in all, it's just a lethargic economy, lethargic growth, I should say, and that's showing up in the national economy. The national economy for the second quarter grew at less than 2%, almost close to 1%, in fact. That's just not fast enough. We need to see growth triple what we're seeing right now.
What about trade? Are we looking a little bit better there?
Cindy, you know, I hate to be such a gloom and doom person, but all the numbers are looking less good, and that's what we'd say about trade. Our export numbers are down a bit. Of course, that can be traced to a global economy that's slowing down. Many of our trading partners, even Asia is slowing, although it's still pretty good growth. And we've got imports coming down because we're just not growing like we were. We're just not buying more goods from abroad simply because what can you buy? I mean, we're just too pessimistic to increase our buying. These are businesses now. We're surveying businesses. These are not consumers, but these businesses are slowing their purchases from abroad.
What about what's happening in Washington right now? Can that have an impact on this?
It's what is not happening in Washington. That's more like it, I think, Cindy. This is just not good. It creates uncertainty, and of course, over the last couple of years, we've had nothing but uncertainty. Like what's going to happen here? What's going to happen about the global economy? Now, in this case, it's the debt ceiling. Are we going to raise the debt ceiling? We will. Congress will raise the debt ceiling, but during this period, it just creates uncertainty. And how does that affect the businesses? Well, uncertain individuals and families and businesses don't buy housing. And again, I hate to keep putting it on housing, but I think that's the area where we've got to see some changes. Of course, it doesn't help that oil prices are up, and it has been up, and that's a big part of it, as well as higher energy prices. And of course, now you've got weather that has contributed to it. In this part of the country, higher cooling costs, that's affecting a lot of the consumers out there. And then it affects the businesses that we survey that sell to consumers. Cindy, I think the number is going to be down next month. I still think we're not going to see a return to recessionary conditions, but for most Americans, it's going to feel like a recession. It's small comfort to have economists telling individuals that it's not a recession when it feels like it. So the unemployment rate is going to remain high. Even for this part of the country, we're probably going to see unemployment rates tick up a bit. Now, that's not good. Businesses are going to continue to experience slow to no growth. That we're going to see not enough new jobs. Wage gains are going to be low. I'm trying, as we're talking, Cindy, I'm searching for some positive news here that I can give you and our viewers. I guess I could say that inflation, the expected inflation, is coming down a bit. Interest rates will remain fairly low, but we need to see, again, housing. We could see if we saw energy prices come down, if oil should go back to $65 a barrel, that would be good news. It's not going to, so we can't cross our fingers on that one. What we need to see, of course, is housing turnaround. We need to see the debt ceiling raised. We need to see Congress quit focusing so much of our energy, so much of our focus is on Congress, not on businesses, not on consumers, not on individuals. That's what we need. Our economy can't be hinging on the words or lack of words from our congressional representatives, our senators, and from the administration.